name is Peter Hogendoorn. I'm the CEO of Sage Potash Corp, and we are vested solely in the development of a potash deposit in Utah for the purposes of establishing national food security in the U.S. market.
We're starting off with a resource of 280 million tons. The deposit has exceptional economic characteristics. It's very, very high grades, probably the highest grade deposit discovered in North America. We have great geology. It's very flat lying and very thick beds. So the economic characteristics combined are such that they can be exploited quite readily at this point. So we're already so the second reason is that we're quite advanced in our engineering plans and our permitting process for our first production holes. So essentially, we're hitting the ground running. As for the geology, as we understand it to this point, we've got very low risk geology for at least the first several mining units, which are essentially land blocks of about 320 acres. And each one of these mining units can produce about 150,000 tons a year for anywhere from 15 to 20 years. So our land position is such that we can actually position about 70 of these mining units. So it shows you the size and the scale of this potential deposit here. Now the long-term fundamentals certainly are favorable. As long as the world population continues to grow, you cannot grow food without potash. So it's one of the three essential nutrients: potassium, phosphate, and nitrogen. Without those three, no life on Earth exists. So that's where we get our potassium from in our diets. It's from the food we eat. So to talk about potash as a requirement, the population around the world continues to grow. There's very few places that you actually can produce potash from. Right now, the biggest producer in the world is Canada. The second biggest is Russia and Belarus, and then China. So 3 out of the 4 main sources are not really sources you want to be able to depend on for your national food security. By having something right in the U.S. borders, you're not dependent on strikes and harbors and trade tariff wars or global supply chains. Everything's basically within the control of our own domestic supply chains, and there's significant cost savings to that as well. So as far as world supply, there is world supply, but that can be affected from time to time. For instance, right now, the Ukraine conflict with Russia, that basically is taking Belarus and Russian supply out of the market, certainly for the U.S. So at the end of the day, it behooves the American agricultural economy to begin developing its own potash security. It's really not so much shortage for the world, but certainly for security for U.S. Consumption, it's incumbent on us to develop that. The timeline we're contemplating and we're working towards, and everything we're doing is designed to a very short timeline to production. So somewhere between 1 and 3 years for initial production, as opposed to 8, 10, or 12 years for large greenfield underground mining. So we're going to be using mechanical vapor recompression units, so we can scale up. We can start with small production. We can basically de-risk the project up front, as opposed to spending billions of dollars and then begin to mitigate risk later. We are actually mitigating risk immediately by making sure that we don't strand any capital. So the capital we're using puts us into production, puts us into cash flow, and we can expand out of cash flow. And that's our plan in a nutshell. And we're starting that. That's what we're permitting for right now. We're permitting for those first 3 holes. We are already doing all of our scheduling, our component scheduling for a reasonable size commercial output of production, somewhere in the range of 50,000 tons. 50,000 tons is not a lot, but it's a fair amount of money generation, especially at these potash prices. And then we can grow as the market demands us to grow and out of cash flow. Well, we've got enough material just with the one hole that we can basically project 1 million or 2 million tons a year for 100 years or 150 years. So we've got the material. recognizing that at this point we've only got one drill hole. But what people have to understand with potash is that unlike copper or silver or gold, where you've got very tight drill spacings, potash drill spacings are in the range of 3,000 meters. So 2 or 3 additional holes, 2 miles on either side, and we likely have a reserve that will never run out. We'll never produce that amount of material. But at the end of the day, I mean, the U.S. right now consumes somewhere between 7 and 9 million tons a year. As you can see, this is going to start off as a regional supplier, but it certainly has the potential to be a national supplier. The company was initially founded with 21 million shares of founders and project generators. We just started trading in March, so that stock is held for 3 years, which all by itself aligns our interests with the retail investors completely. We're not in this for a $2 or $3 share price. We're in this to unlock what we believe is $1 billion asset value. We own 63% of the company, and we only profit when we all profit together. And that's essentially, we're designed to become attractive to a major and have an exit strategy. That's really what our plan is. And the further we can demonstrate that we have the ability and the commitment to go into production, even in a small way, we'll just make this that much more of a acquisition target that needs to be paid attention to. At the end of the day, Sage wants to be viewed by American investors as American potash for American farmers. Everything's been outsourced, and historically, whether it's uranium or whether it's even oil and gas, the U.S. has been very, very comfortable relying on foreign supply for the things that they need. The world is changing, so we want to be able to show our American investors and shareholders that we are positioned to provide long-term security for American farmers.